And welcome to day 3 of GCAP. This is the investment summit, GCAP Invest. And I have with me here today two excellent people to be talking to about investment. We've got Tom Davies and we have Ben Lee. Tom, can you introduce yourselves?
Sure.
Introduce your multiple selves, obviously. Yourself, thank you.
My name's Tom Davies. I'm currently working with Keywords Australia, who many of you be aware has acquired Tantalus earlier this year. And we're currently looking to grow our Australian game studio business here. Before working with Keywords Australia, I actually was on the other side of the fence working with Tom Crago, the CEO of Tantalus, to help him sell his business. We sort of ran that process for about 9 to 12 months in the end, and sort of navigated that through, ended up selling to Keywords and then jumped ship and started working for Keywords. Prior to that, I've worked with a lot of startups and games development companies over the last couple of years as a corporate advisor, helping them with fundraising and growth strategy. And the reason I got interested in games was many years ago, worked at a VC fund, and we actually acquired Tantalus back in 2007 and had a roll-up strategy that we were enacting, and then the GFC hit and everything went to mud. And you know, that was we learned a lot about games development studios at that point, and we ended up parting our ways with Tantalus. But yeah, that was sort of my introduction. At that stage, I think there was a huge explosion of social games, and you know, sort of Fruit Ninja and everybody else was just beginning to sort of take off and explode. So that was a very different focus back then. I think things have changed a lot in the last 10 or 15 years, and looking very much forward to discussing some of those things today.
Yeah, me too. And Ben, can you tell us a little about yourselves and yourself and Blowfish?
Cool. Hi, yeah, I'm Ben Lee, co-founder of Blowfish Studios. I started off as a small indie studio in Sydney with myself and my co-founder Aaron Grove. I've been, involved in, loving game development my whole life since I was a kid. First professional game job I had was in 1998 for like a small indie studio here in Sydney, Perception. And yeah, and I started Blowfish 11 years ago now with Aaron, and we recently sold the company to Animoca Brands just a couple of months ago, and that's why I'm here talking about that journey and what happened then. And I guess with Blowfish though, we went for 10 years essentially with no funding, no investment, just bootstrapped all the way through, and I guess people here might be interested to hear why or how, or why did we end up selling the whole company. So
yeah, Blowfish has sort of, I imagine, been through every variety of games funding available at this point.
Yeah. We had some, lucky to get some early on support from the government when it was there, and then went through that stage when it wasn't there, and now coming back, and it's lots of different experiences.
Yeah, I mean, and I think that's true of both of you. Thank you both so much for taking the time to do this. I think this is going to be a really interesting and useful conversation for a lot of game developers in Australia who don't have a good sense of, what is equity investment and what does that mean for a company, and is this a viable pathway for the Australian industry to take when funding our studios? Just to get started, for anyone who doesn't sort of fully grok what those terms really mean, can we define sort of what is equity investment? What is equity, and how does that work? Tom, do you want to run through that for us as the investment expert?
Sure. I'm not sure if I can be billed as an investment expert, but I'm happy to have a stab at
Give it a red hot
equity.
go.
Obviously, equity. I think equity and ownership need to be distinguished. So, obviously, equity is the shares that you have in the business, and whoever owns the shares owns the business. But there is also a distinction with control as well. And back when I was in venture capital, we used to be very interested in the aspects of control. So you might have different classes of shares, and some shares have voting rights and allow you to do certain things that other classes of shares don't. So you'd be familiar with Mark Zuckerberg and Facebook. He doesn't own a majority of the shares in Facebook anymore, but because of the shares that he does own and the rights that attach to those shares, he actually has an enormous amount of control over Facebook. And so just because you give up a majority of equity in your business may not mean that you have to give up control over your business, and vice versa. Just because somebody has only acquired a minority stake doesn't necessarily mean that they won't want control over certain aspects of your business. So I think that's the important distinction to keep in mind. Minority and majority just refers to, classically, a majority stake is anything over 51%, or well, actually anything over 50.1 really. But the idea being that in terms of voting rights, if everything being equal, then whoever owns the majority has control of the studio. Or control of the business, and that's usually important.
Yes, I imagine it is. And I think that point about the distinction between, equity and control is really crucial, because I think a lot of people do imagine them as being the same thing, but a lot of studios with investment actually have full creative control or full control of their business, or, have a minority investment, as you mentioned, and don't fully control their business. And both of those models can absolutely work depending on the partner, which we'll talk about later.
And that's something that's really important to think about too. I mean, we'll dig into it later on, but the idea of what it is that you're giving up and what you're comfortable giving up and what do you want to retain as an owner and someone who's developed a business over a long period of time. I think that's really important. Absolutely.
I was just having a conversation the other day about, the different varieties of games funding available to people. And one person I was talking to said, I can't imagine why anyone would want to enter into a publishing deal when they could get investment, because the investors are on the same page as you, they want the same thing as you do, and you get to keep 100% of the revenue from that game rather than giving it away. That was really eye-opening for me in terms of like how I thought about investment as a vehicle for funding, because that's absolutely true. And most publishing agreements, you're giving away 50% or more of the back-end revenue, so you're not able to invest that back into the studio to grow. So you both come from very different sides of the investment sphere. Ben, obviously you have grown your own studio, been through every imaginable vehicle for funding, done a lot with Blowfish over the last 11 years, and finally decided to enter into an acquisition with Animoca. And Tom, obviously your experience working in VC, getting introduced to games, working with Tantalus, and then parting ways, and finally coming back all the way around and working to help sell Tantalus with Tom. Sorry, not with Tom. With Tom, with Craig.
Yeah, that's right.
And that's such an interesting loop for one. Pretty incredible that you got to sort of complete that. But that is a very interesting perspective that we don't often hear from in games, the side of like, what is it like as an investor, somebody who's coming in and working with keywords to sort of buy studios here. So I want to hear from both of you about like, what have those journeys been like? How did you come to the conclusions that you did? Why would a studio look at this sort of investment, et cetera? So why don't we start with Tom? What was that like entering into games back in 2007, you said?
I think it was 2007, 2008 that we first acquired Tantalus.
So a completely different industry.
Acquired it was. And, we acquired a minority stake in that business we acquired a majority stake, but with some control points, which was important for us. But we had the option to acquire the remaining minority with sort of performance hurdles. But what we were trying to do at that stage was to roll up. So we saw a whole bunch of different games companies in Australia that didn't really have scale, and we saw an opportunity to roll them up. And we just started along that process when the GFC hit, and essentially, as everyone will be aware, publishers and distributors just went boom, and the money just dried up overnight. And it was sort of the apocalypse for many people. And, it was really tough times. And, I think studios were able to, mobile game studios and self-publishers who are able to distribute their own games and put them onto different platforms were able to get through. But a lot of the bigger guys who were relying on distribution and publishing deals weren't. And some of them pivoted and some of them didn't. And, so it was tough times for a lot of game studios. And we, as a VC fund, sort of looked at it and took a step back and realized that it was incredibly hard to know with any sort of foresight which studios were going to be successful. So as an investment decision, it was a disaster. And in many respects, that hasn't changed much. We still don't know. You still can't rely on previous success to guarantee future success. And, in many respects, when you're investing in IP and studios that are developing IP, that's what you're hoping. You're hoping because you've done it before, you'll know what that magical combination of elements is that will make a successful game in the future, and that will bring in a lot of money. And that's sort of like investing in a movie studio or investing in a musician. I guess musicians are a little bit different, but movie studios, certainly you just don't know from one movie to the next. And games was sort of a similar idea. So where that sort of left me and sort of my sort of view on the industry was that you have that component, and that can work very well, that IP creation, going your own route, but you have to be able to bootstrap that, because it's going to be very hard to attract investment without giving a house away, because people, unless you've got a lot of credibility, are really going to struggle to overcome that idea of, how do I know it's going to be successful? How do I know that that I'm going to get a return on my money? Because fundamentally, that's what investors want. Whereas for game studios who maybe don't have as much potential to make enormous amounts of money, but can reliably make 30, 40, 50% margins, and then it just becomes a scale game. And that's a different type of investment. So the guys that I work for now, Keywords, that's what their bread and butter is. They just they've acquired 70 companies over the last 7 years. They've grown from 50 to 10,000 employees. They've acquired, I think, 10 game studios in the last 18 months. They're on acquisition bent, but they're all very focused on game studios who do work for hire, or fee for service, really. And that is a particular model that they're interested in. There are other investors and other publishers who have a very different focus, who are looking for royalty streams, or are looking for people who can develop great IP and that they can distribute and publish it. So that's been a really interesting experience for me to sort of see, I guess, ride that wave and identify that there are both strengths and weaknesses in both models. And I guess now, as an investor and talking about investment, it's important that when you're thinking about it from a studio perspective, you understand what are the motivations of a potential investor and what are they trying to get out, and what are they looking for, because that's going to help you identify what potentially you have to offer them.
Absolutely. I remember early on with Summerfall, when we were deciding which route we wanted to go down, one of our advisors was saying, think very carefully about whichever partner you get into bed with, regardless of whether it's publishing or investment, et cetera, because essentially it's like bringing on a co-founder in many ways, and you have to make sure that those visions are completely aligned. And so, your point about making sure that that is aligned is very well taken.
And Liam, it's partners in good times are often easy. It's partners in bad times. And, when the GFC hit, we had to have some really tough conversations. The Tantalus had grown, was much, much larger. We just expanded into Brisbane, and suddenly the work dried off and we had to let go of people. That's really tough. And suddenly the vision that we'd had, the combined vision, looked very, very different. And I guess that's where thinking about the type of investor that you're bringing on, as you said, like once you're married, it's very hard. Once you've given away 25% of your business, or 49 or 51 or whatever it is, it's very hard to get that back.
Yeah, absolutely. And very much on the other side of the equation, we have Ben and Blowfish. Ben, you started Blowfish 11 years ago. it's been an incredible journey to watch over that time. What led you to the decision to essentially sell the studio? Because I think that that's a very new concept for Australia, the Australian games industry broadly. So what led you personally to sort of go down that route?
Yeah, no, I mean, it was only a couple of years ago, probably only no, actually less than that, probably 1.5 years ago, that I didn't want to sell the studio. I never had, actually that was my key thing. I didn't want to.
Yeah.
So, I mean, it happened before the pandemic, I guess late 2000, oh man, so long ago. Was it 2019? Yeah,
2019?
2019, right? Yeah, late 2019. We were working on some big projects, and we were looking for project funding, and that's where we started, right? We're looking for project funding and investment there, and we're having some really good conversations. And then I guess the pandemic hit, and while pandemic not great for the world, it was good for the games industry in a way. But it changed a lot of things for us. So one of the things that we saw was that the people looking for project investment, they pulled back. They pulled back not because they didn't have the money or didn't want to do that. It's because when any kind of financial crisis hits, or perceived one, because before the government started giving out tons of money around the world, it's an opportunity for people to invest in and find, I guess, better deals, or there's a lot more on market that investors can look for. So we found that happened. And so how we got into this process is before in 2019, I was speaking to Thomas, who was ended up being our consultant for the whole process. But he was working for MTG at the time, as similar story to Tom here, right? Like other side. So he was on the other side, and we were talking to him about investment from MTG, and but then that kind of stopped. And then in the middle of last year, it's like, okay, Thomas kind of I talked to him a couple of times, and that's when I started thinking, it's time. It's been 10 years. It's I still wasn't 100% keen on selling the business or even looking for an investor, but I agreed, look, I'm ready to experiment, explore. And so we brought Thomas on board as Spawn VC, and we started that process. And so it was a year long, asking what are the steps involved. So we used someone to help us with that process, and that was really good. We prepared all our kind of our presentations and our management decks while Thomas went out and started looking, I guess getting ready to reach out to all the different places. While this was going on, there was the deals had started happening, I guess, in the industry. So we were also getting contacted by people as well. So it was back and forth. And look, we did that, and through that whole process of the year, there were many different options that we explored. And how you're asking, what options were there? We looked into venture debt. We looked at normal debt. You say, oh, why can't you just get a loan? And so even at the time, there was some appealing, I guess, government-backed loans that you could get, but when you go into it, you can't really. So I think venture debt and normal loans was similar for us. The amount that we were looking for the funding, those avenues, it's just not enough there for us. So they kind of the cap and the risk and venture debt's got a very large kind of interest payment on it. The normal loans for the banks very low, but both just didn't really work out. We looked at with Mighty Kingdom PlaySide doing their IPO. We actually we looked into IPOing as well. We had some opportunities there. We had a partner there, and that was something we looked into. Personally, great job to Mighty Kingdom and PlaySide, but the more I looked into it, I couldn't be that person. I can't. There's a lot of work, and and if Thomas is listening, he'll tell me, "Oh, Ben, I keep telling you, it's not a lot of work." But for me, you know, what I mean, it was real work. It's not my love. My love is to make games. So that's not what I wasn't looking forward to that aspect of it.
In one of the panels that follows this, I interview Cheryl Vance from Prideful Sloth and Tony Lawrence from Mighty Kingdom and Scott Rosmanis from Mod.io. And Tony was saying, you know, his job as COO has changed dramatically during that period. So, you know, it's a big shift.
Yeah, no, and like, you know, props to anyone that does it. It's a thing. So yeah, so we did that. We looked at actually full mergers with people as well. So that would have been interesting. And then we had a couple of full acquisition proposals as well. And I think like both of you, Tom and you were saying, you know, we looked at the partners and how we aligned, what position we would be in after the acquisition. And really we wanted to choose we're in a very lucky position in that, you know, we'd grown the business to where it was. So we had options there. We were able to choose, I guess, which way we wanted to go. And you know, we were able to choose, I guess, what would gel well with the studio, what would gel well with our future, and you know, what would just be. It's still you never know the future, right? So you got to make an estimated or educated guess and that. So we made that choice to do it. And I think just because of what happened around, also, sorry, I forgot to say, and when the DGTO got announced this year. So while that, again, pandemic was great for games, DGTO was great for the game industry here. That actually came at a very awkward time for us. We were in like the final stages of an acquisition, and then what that did, it just kind of created more interest again in the industry here, and then that just meant more people came. It's like, but you know, I'm already a long way down this process, and now there's other people. And it's like, you know, it's like yeah. I mean, we spoke to some, and it's just, unfortunately, it was just, you know, wrong timing for where we were. But you know, we're extremely happy with the process we've gone to. Everyone at the studio is ultra excited. You know, we're growing. You know, the last 3 weeks we've like put on 10 or 12 people. So
wow.
You know, yeah. So I think I answered. Yeah, I think that's kind of.
And can I ask, how did you go about finding partners? Did you, obviously we're getting a lot of inbound interest, but did you have a list of people that you were also interested in going out to? Did you sort of have a list of ideal acquirers?
Yeah, and that's where, you know, Thomas really helped out, because he had come from the other side where we're working for Ernst & Young as well as part of the M&A, and so essentially we made a list of all the different companies that we wanted to speak to. And then he went out and essentially, you know, contacted, and either through contacts that I'd made already. So we reached out that way, contacts he had, or also still just cold calling back the other way. You know what I mean? So yeah, and overall, I think we reached out to like over 60 different companies, and
right. Wow.
and you know, we kind of ranked them. You know, I guess, you know, how, you know, about, you know, that's got the people that, again, with that end game, who are the best partners. But still with that process, it was more about, okay, you know, things can change. There's still that negotiation phase. So we even though we'd had preferences, we still reached out to not everybody, but the people that we thought, oh, there's something achievable there. So just to kind of, you know, for myself, like you're saying, like there's not many studios in Australia that have been through this whole acquisition or investment process, and I had never done it either. So it was also a process of, let's do this, give me some experience in talking to potential acquirers and investors. Like, had so many meetings, and you know, you just get more comfortable every time you speak to someone. And that was a huge learning experience. Like, again, I'd not been through something like this before. So.
Totally. So you kind of touched on there about how few people have gone through this process, and I wanted to sort of ask, because over the past decade, we haven't seen a lot of investment or acquisition. in the games industry until literally the last year and a half. Why is that? Why is it that suddenly studios in Australia are starting to be acquired and investment is sort of becoming a more viable option? Free to anyone, anyone who wants to.
I'm happy to jump in with my perspective, but
yeah.
I think I think it's partly because of the reasons that Ben touched on with COVID and the sudden explosion in interest in games. I mean, games have really been trending up over the last couple of years. Certainly, the last 5 or 6 years. There's a lot more consoles. There's a lot more investment in games. Games have become a lot more mainstream, and there's a lot more money floating around. And now there's some very big studios, but it's not just studios. There's also a whole bunch of probably second-tier studios who've grown up and are now much bigger, who've listed. You've got, obviously Keywords, but there's Embracer, is a massive one. Paradox. There's a lot more options now. You've got all the different Chinese companies as well. There's some in India. There's a lot more. There's a lot more money floating around, and there's a lot more interest. And I guess why now in Australia? Well, for so long, Australia has sort of been viewed as the backwater. There have been acquisitions that have been happening in Asia, in America, in Europe, and they've been going on for years. The fact that Keywords has been able to acquire 70 games companies in Europe, but this is the first one in Australia. Shows that they just haven't been focused on the Australian market. And I think that's similar for a lot of the other companies as well. Australia is too far away. Most of them have their headquarters in North America or Europe. So it's a long way for them to sort of mentally have that headspace. There hasn't been a lot of sort of focus on Australia because there hasn't needed to be. But I think as the competition for quality staff and for quality developers has increased, then the appetite and the willingness to focus on Australia has increased. And certainly that's our experience. Certainly, when we reached out to Keywords, this is when I was working with Tom, we had to go out and almost educate some of the companies that we were speaking to about what we were doing in Australia. We had a different approach to Ben in the sense that we were very focused and very targeted on the companies we wanted to work with and partner with, and we only approached 3 or 4. But there was still an education process about, some of the first slides that we had to present to were about, this is Australia, and this is why we're special, and this is the depth of talent, and you should be here. And, I think they're beginning to get that, and we're beginning to see a lot more interest, and certainly the government initiatives that have announced. I mean, there was another one today from New South Wales, which is fantastic, or recently. Those kind of initiatives are attracting a lot more interest, but they're absolutely necessary to do so. So I think partly, there's structural reasons, and partly it's just been, it's taken the world a long time to wake up to Australian talent.
Is it also sort of a question of maturity as well, like studio maturity?
Yeah, I think that's true. I mean, things take a while though. So maturity, I think, happened here, maybe a couple of years ago, because the indie scene has been growing and taking off. And again, being one of the studio owners, and like I said, I never wanted to sell, but over the last couple of years, those conversations have happened. And I guess that was a good indicator that it was actually probably accelerating. So even though the COVID or pandemic probably set it off, it was already accelerating. Yeah. So, and you've probably seen that, Liam, right? Over the last few years, it's been getting greater. So I think it was a general, natural progression that was going to happen. And then things take a while. I think not being able to travel put Australia on an equal footing with the rest of the world. So, otherwise in the US, there's so much competition. They have so much access, Europe as well. So I think part of that helped Australia and coming down here. The Aussie dollar has been on a downward trend for a decade, ever since the GFC, right? So, or a bit after that, and then it went up, and then it's just been trending down. Again, things take time. So even though we've been around the same level now for the last couple of years, probably it takes, people need to be able to see that as well from overseas, that our dollar is cheaper. So that's another reason why I think that's done that. I think, you know, people are generally more open now to investment too, like studio wise, like you're saying, where that maturity might have come in. So like us, a few studios probably a couple of years ago, you know, started investing a lot more heavily into games, and then part of that is what also increases the appeal, or, you know, for larger companies to come in, because they can see we're working on larger products. And I think if you look at the acquisitions, they're all coming off pretty major projects that each studio was working on. You know, we're just about to announce ours tonight. Like, well, yeah, not tonight, but yeah.
it'll be last week by the time we're airing this. Yeah.
Yes, yeah. So, but yeah. So, you know, I think that's played a part as well.
Yeah.
And I think the global interest and all the news reports that people have been following on the multiples that games companies have been getting has also helped, right? Because suddenly people are looking at it going, hang on, what? How much are they getting paid? You know, I want a little piece of that. And so that has helped in terms of people suddenly thinking about, you know, Ben, you spoke about the maturity of the market. That's helped sort of get a lot more studios thinking about, oh, well, maybe I should be exiting. Maybe this is a good time. And certainly, speaking to Tom Crago, that was sort of, you know, part of his thinking was, I've been doing this for 20 years. You know, this has been hard slog in sometimes. We've had ups and downs.
Yes.
And, you know, now's an up. So now's a good time to, you know, to be having these conversations.
Yeah. And that's probably one of the reasons why, you know, I never thought about it. Because when you, I mean, who wants to sell their company for like 3 times, 4 times? It's like, well, I'll just keep working for a few years, right? It's like, but then when a sale only happens when both sides can meet and come together and agree. And so, and that an investment. So I think you need the right environment for that, the right circumstances.
Absolutely. So why are most of the investments that have been happening in Australia majority acquisitions, do you think? Because I've noticed that as a trend. Like, we've had a couple of IPOs and the rest have almost exclusively been majority acquisitions as opposed to minority investments.
I mean, from my point of view, with talking to people, it's just that was the appetite. Everyone we spoke to said to us essentially, look, we're not interested in minority investments. We're looking at majority. You know, that's all we kind of look for. And we always said, look, not what we were going out for, and it wasn't. We went out for an equity raise, and but if Tom just said, if the offer is right and we see our future, and it's, you know, I think one thing about here in Australia is that all the games companies, we're not startups, right? None of us came and raised money and then started a company out to be a business. We all started a company because we wanted to make a game. And that's what we are. We're game makers. And so I think that's why it hasn't happened, why it's big now, because people, it's more important about the game and making the game and what you're doing with the studio so much. And so being able to find the compromise between those two, I think is now we're finding those more opportunities which work, a win-win essentially for both sides. So
absolutely. And I think that there's a lot of studios sort of more recently who are sort of thinking more long-term and thinking of themselves as businesses as opposed to IP creation houses exclusively, like where we're going to work on a single game or we start a studio to build a single game. It's, you know, we're certainly more along those lines where it's like, no, this is a long-term plan where we, you know, we've spoken to everyone, we've seen what's happening in the market, and, you know, we're definitely interested in that long-term.
Yeah. It's a great environment for you, people like you now in the startup. I think too now. It's a lot of there
was definitely a reason that I wanted to start Summerfall when we did, for sure.
Yeah.
Tom, from your perspective, like why have most of these investments been majority?
So I think most of the investments have been a majority because the companies that are buying them need them to be a majority because they need to have control. So for Keywords, the control element is really important, but also from their perspective, they need to be able to consolidate the revenues. They buy a company on the basis of its revenues and its earnings, and they pay a multiple of revenue or multiple of earnings. But the revenues, the earnings flow up, and that goes towards their share price, and that's partly how they fund the acquisition. So for them, it's important that they can roll that up and that they get the benefit of that investment. For them, the other part of it is if they're going to then invest a whole bunch of money into the growth of that business, they don't want to then have to pay for that later on. So if I've got a minority stake in your business and then I'm giving you millions of dollars to grow the business and have to then buy back that growth at a multiple, well, that becomes expensive. So, as a potential investor, I want that control. That's not to say I want creative control, but I want to be able to make the decisions if we need to around allocation of resources and what happens with, funding for, sorry, not future funding, but like capital raising and thinking about capital investment and, growing a staff and all those other kind of decisions. Ultimately, if we're putting our hand in the pocket each time, we want to be able to know that we've got control over that decision. There are some companies who make minority stakes and they'll take almost a kind of a VC approach where they take small stakes in a whole bunch of businesses. And this seems to be more Tencent and some of the other Asian companies' approach, but they'll take very small stakes in businesses and they'll just see. The issue that I have with that approach from I guess from a recipient perspective is often those minority stakes have the impact of closing doors in the future. So if you've got a minority stake from a competitor, that's going to be very hard. Tencent then has control. They have a blocking stake on any future acquisition. And for you to then do anything with that business, you have to get the authority and the approval of Tencent, for example, before you can do anything. And that may limit your options. So from a perspective of the owner selling their business, if they can get their head around the partner that they're bringing on board, then sometimes a majority stake in getting the full benefit now is better. And as Ben said, if you can get 100% of the value that you want now rather than 10%, then from a risk perspective, that's risk off. And particularly if, and Ben can speak to this later on, but if you structure the deal so that you get earnings upside based on what happens in the future, then A, you've got a nice little nest egg that you've tucked away, and B, you're not locked out. You're in alignment with your strategic partner to grow the business and you get the benefits of that. But you get the security of it being someone else's problem if the proverbial hits the fan.
Yeah, absolutely. And I think that overseas too, we're beginning to see more of though not just Tencent, but like a bunch of VCs are now starting up in the game space, sort of supporting young studios. I think almost every week now we're seeing a new studio pop up with $50 million of investment from this entity.
Particularly in the US, it's crazy.
Particularly in the US,
absolutely crazy. Yeah,
a lot of people I know are going down that route, and it's certainly attractive. And I think that we're going to be seeing more and more of it here. And that's part of the reason I wanted to have this discussion too, to sort of be like, okay, well, what does the end game of that look like? Because for all of them, all of those investors are also looking for an exit. They want you to sell your business so that they can recoup.
Yeah, and I'll be really interested to see in a couple of years where that goes. My sense is that there's a lot of money being jettisoned right now, and in my experience, Australian investors generally, we don't have deep pools of capital like you do in the States, and Australian investors are much more risk averse, and they're much less likely to embrace technology. That is changing, and there are some more, there are bigger tech success stories that are happening here, not just in games, Canva, Atlassian, etc., which is sort of opening people's eyes. But for a long time, technology really has struggled to get sort of pride of place in Australian investors' perspective. And I just don't think that they're yet willing to risk the same amounts of capital that you've seen in the States. And we don't have those sort of special purpose acquisition vehicles that you've seen growing in the States over here as well, which is, the vehicle by which they're able to aggregate these pools of money and then throw it into something and see what happens.
Yeah, I suspect we'll have a lot of foreign investment rather than it being internal.
Yeah, I think you can see already, like all the deals that have been done here, mostly it's from foreign investment, right? It's not from
Yeah.
from Australia. And we tried to reach out to as many local investment people as possible. And like you're saying, it's just the appetite and interest is just not there from the local people so much, because one, they're not game savvy. They don't.
Yeah.
People don't care about games here like they do overseas, for whatever reason. And even software, like you're saying, it took Canberra and Atlassian so long to reach where they are. They're not overnight sensations. They've done a terrific job, but they've worked their butts off to get to that point. And I think we'll get there eventually, just because of all the exposure and everything like that. So I think it's going to be better for future Australian game dev companies, for sure. Just because now with all these deals as well from the foreign investment, then the local community is just going, oh, hang on, well, they're all coming in, they're having success. Then why are we holding back? And so
some gentle pressure.
Yeah.
So what are just quickly then, what are the different funding sources that are available to developers, and sort of why would you pick investment or equity as a route?
Yeah, like this time, the very first funding source we used was family. So you've always got your family and friends, but we only did that when we knew we had some money coming in. It was kind of a bridging loan. So I mean, you've got that. I wouldn't recommend that to anyone. Like I don't like borrowing anything off my family. So, you know what I mean? So there's that there. But we did it because we knew there was some fine funds coming in. There's finance companies that offer the same kind of bridging loans that they would do, like EFIC, like the export fund or export finance, I think is they know that if you're exporting and you have some sales revenue coming in, then you can get kind of bridging loans as well for there. Then I think I mentioned before, you've got venture debt, which is essentially like, you go to a bank for a bank loan, but these venture debt it's not a bank. They don't, they ask for less, or they don't need like a guarantee on your house or something like that. But the terms are, a lot, interest rates are a lot higher. It can range between 7 to 20%, right? So you've got that, and they're still not great here in Australia. They still kind of base it a bit off your revenue. So if you're not revenue producing, it's still harder to get venture debt here. And you've got your normal mortgage. You're going to mortgage your house again. Not something I'd recommend, but everyone's risk appetite is different. And you've got still your government funding. So depending where you are in Australia, you've got various sources of state funding, and now with the federal funding coming in. I think because of the digital, that tax offset, you'll see these bridging services actually work off that as well. So that happens right now in the film and TV industry, that these loan financiers, they understand you will get a tax back or a tax refund, and so they can loan you that amount, and you'll pay some interest on that, but you'll get that back as well. So that will probably increase and get a bit higher.
And we should point out that that's probably only available to studios who are doing fee for service. It's not for IP development, because the IP like when you have a fee for service, you have a contract you can take to a bank, and you can say, or to a venture capital fund, or to the Film Finance Corporation, whatever the equivalent is for games, and say, here's my contract. I'm going to be paid in a year and a half. I need bridging finance now. And they can look at that and go, yes, okay, we'll loan against that. If you don't have that contract and you're saying, I'm currently working on the next fortnight and I know it's going to be a huge success and I'm going to make mega millions, can you give me $10 million to finance the next 5 years? You've got no chance. No. And there's just no availability there. Then you're reduced to getting, $50,000 from the Queensland Games Development Fund, which is great, but it doesn't go very far. And, there's not many other sources of funding. So for a lot of the more established studios, they have more options, but you really need to have cash flow and revenue and profit, because they want to see a trading history and they want to be able to project, and they know that if I'm giving you money, that you're going to be able to make your interest payment in 6 months or in 12 months. And it's the same with venture debt. they will take a bigger percentage the greater the risk that they perceive in your business. So the more that you can show that I've got this history, this trading history of making profits, and that I can take money out of the business and use it to repay that debt, the more comfortable they are giving you that money. But that's not available for a lot of the studios, and a lot of the studios that we've spoken to are either creating their own IP, which makes it hard, and then they're self-financing, or they've got to get investors, and that's
or a publisher, I should say. So
Yeah.
the last thing I was going to say is that us Blowfish as a publisher, we have we funded and fully funded a few projects here in Australia as well. So
yeah.
So why would you think about investment for a studio? Like, what is the right condition, or what are the right conditions for a studio to look at an acquisition or investment? And what things should you consider? Tom, do you want to start?
So you're speaking from a
developer's perspective.
From a developer's perspective. Look, I think it really comes down to what are you trying to achieve? And, like some people are very happy with, their team of 6 or 10 people that they're managing, and they're producing some indie games, or they're producing mobile games, and they've got a good thing going, and they love developing games, and they're very comfortable with that. And for them, there's almost no reason to change that as long as they can see that that's going to continue. There may be a reason where they're sitting there going, actually, I'm the one that's always taking the risk here. I've got my house, I've still got a mortgage attached to it, I've got a bank loan, I've got an overdraft. I need to get some money out because financially, I've been doing this for 10 years and I'm beginning to feel like, what's my exit? Then maybe for those type of people in that scenario, then maybe they're beginning to think about, they're ready to take on investment or to look at an exit. For other people, it might be that, okay, I want to start growing the business. I'm not able to, do what I want to be able to do, or I know for some games developers that we've spoken to, they're just sick of the cyclical nature of it and, the hit and miss nature of it. And they just want the security. They want to be able to do great games, but they don't want to have to be the person who's worrying around whether they can make payroll. I mean, that's enormously stressful. I've done that in my own business. Ben's been doing that. You've done that, Liam. I know how stressful it is thinking, oh my goodness, I'm running out of cash. What am I going to do? And a lot of people don't like that stress. And so thinking about taking on investment to help alleviate that is absolutely legitimate. So, Ben, you could probably speak to why you took on investment and what was sort of the original reasons. But I think you as a studio head need to be very clear around what is it that you're trying to achieve, because that will help you determine who you're going to talk to, the type of partners, but also potentially, if you've got a choice, the type of funding options that you're going to be looking at.
Yeah, that's all good. And I think for Blowfish, we're in a special position in that we're kind of very diversified in that we make our own games, our own IP. We do work for hire, and we're also a publisher. So for us, the reason why, one of the key things why we started going out for investment is because the amount of, I guess, missed opportunity, the opportunity that was presenting itself to us day in, day out, week in, week out, was huge. From a publishing side, we've got games being pitched to us every day. From internal development side, we've got some amazing games that we want to build. We've gone out, we've got either got the licensed, or we've been building it ourselves internally. And it was just like, I'd be sad if I missed out on, doing those things because I didn't have access to capital. And it wasn't that before, because we weren't that large. We'd grown, started at 2, gotten up to 30 people. Other side is 100% the stress of, cash flow is enough to make a grown man cry sometimes. So, it's like, it's definitely there. So, I think, but for us, it was just that opportunity that was being presented. And I think if we could, if we could have, and we did find the capital, then it just makes us excited about what we can do. Another thing is here in Sydney, just being able to we always get people applying for positions that we don't have. You know, there's a large workforce out there that through young and old, from people who are pivoting from careers, right, that not in games, just professional, you know, things, and they're not creative, and then they want to go into creative. And so, you know, you just meet some really great people, and just being able to, I guess, you know, help, you know, just bring people in to be part of, you know, letting people earn a living and doing what they love. I think is, you know, that's very powerful too.
Yeah, I think that's a really, really valid point. I mean, it's not just the growth for growth's sake, but there's also, you know, it's thinking about what it is that you really want to do and what do you want to give back, and you know, is the party you're bringing on going to help you do that? I mean, I was just thinking about another group that we were speaking to a couple of weeks ago, and they just said, we just love developing games. Like, that's absolutely what we want to do, but we're rubbish at sales and marketing, and we're not very good at publishing. And so we need someone who can do that for us. And so they were looking for a strategic partner who can just come in and fit those pieces together. And they were, you know, they said, if you give us money and then we can just do that, that's our dream. Like, then we don't have to worry about it. We're doing what we love, and you take care of the rest. We weren't able to help them because that's not what we do, but there'll be someone else who that will be a perfect fit for.
Totally. I mean, that's such an important part of this as well, is understanding like what it is you're looking for outside of capital. Like, who is the right partner for your business? I'm conscious that we've only got like 5 minutes left, so I want to sort of rush through this section. But in terms of partnerships, sort of what kind of partners are there out there? Why would you consider certain partners over other partners? Can you talk us through that process from both of your perspectives, and sort of like, Ben, when you were going through the process of conversations, what were you looking for? And then Tom, like with Tantalus, etc. Could you go through that as well?
Sure. Yeah, I mean, for us, again, because we actually have many different parts to our business, there was many opportunities for partnerships. One was purely from a great development point of view, local and other local games companies that if we merged with could, we felt we were really good synergies there and just make better games. Yes, we had some expertise and they had some other expertise, and so that would be really cool. Other ones were more with Animoca, who we went with. They're a smaller company, so we had opportunities with much larger companies. So it came down at the end to kind of like, do we want to be a small cog in a large machine, or Animoca, where they actually come to us and look to us for a lot of help with other studios, the small studios they might be acquiring as well. And that's me to a T. Like, I'm very strategic. I love talking to other studios. I love helping build up other studios. I like, what I mean? So it really just let me, and for us, like our studio can concentrate on making great games, and I get to become a bit of a game designer again. So I'm doing that. But then I also, I don't have to worry about the money, and I can just meet great people and exciting people. And to me, I'm just having so much fun now. So
that's great.
Yeah. So that was that kind of partner that wanted what we're good at.
Yeah. And
really then had the resources to help us to amplify that up. So that was cool.
Yeah, and look, I'd just echo Ben's comments there. I mean, with Tantalus, we were very clear on the type of partner that we wanted. We had a price in mind, so we knew what we wanted to get, or what we were aiming for. We thought that the people who would value us most were the people who we'd already been working with. So, we approached those guys first. And then there were a couple of big sort of listed groups who we also approached, because you knew that they were in acquisition mode. And, so for us, it was a pretty simple decision, but we're also, we're a work for hire studio, and that's all we did. And so the options in many respects were quite limited and quite narrow. I think, if you're developing mobile games, then, there's different studios who might be doing that. If you're an indie and you've got your own IP and you're looking for a publisher to help you with that, then there's other studios who, there's partners who can help with that. There's, and you've got to think about what they're giving. So have they got access to millions and millions of customers that they can open, put your game in front of? And is that, what's that going to look like? And So that wasn't a consideration for us, but for other studios, it may well be a really important thing to think about the platform and the access that they have through that platform. So that's kind of the strategic element that Ben was talking about thinking about what it is that you do that's special. If you're a middleware developer, then, who can give you the best access? Is it working with Sony, for example? And does that give you a credibility that you don't have now? Or can you find someone else who can open up doors to different studios, or who can package you up as part of their game dev kits and send you out? Think about what it is that you're looking to grow your business and to achieve your goals, and then think about who's going to help you do that.
It's a really great way of framing it. Before we finish up, sort of if this has sparked something in anyone who's listening and they're interested in sort of like maybe starting to investigate this process or learning a little bit more, what is the first step here? What is the first thing that people can do to sort of discover if this might be the right path for them even?
I mean, I'd say, look, don't be afraid to reach out to people that like myself and like Tom, where the deals are public and they're out there, and people are, we're always willing to have a chat. That's one part. I know the IGEA also putting together some great resources. So again, can reach out to them as well, and they'll be making some of that public. I think we're all part of that. So we're all helping build that out. So that's another avenue too.
Yeah, I think certainly reaching out is a good way to start the conversation. I think something that is also important to do is to start thinking about, have a look internally and think about what is it that you can do to put your best case forward. Because once you start those conversations, things will move. If there's interest, they will move very quickly. And it won't be, oh, well, we had the conversation, then we've got 12 months to get our house in order. You don't.
Yeah.
Suddenly people are going to be having, you're going to be having conversations with investors and bankers, and they'll be asking for financial statements, and they'll be asking for this, that, and the other. And it's a really bad look if suddenly you're sitting there going, actually, I don't have any of that data and I've got no idea. And so ideally what you want to do is, if you are going to go down this process, take a month or two, maybe engage someone as Ben did, or use your accountant, but get your house in order, get your accounts worked out, tidy things up, remove all those sort of expenses that you've been popping through the business. Make sure that you have answers to basic questions around, how profitable is your business? What's your growth strategy? Have your contracts in place? You need to be able to know about your business and talk about your business with a lot of confidence. And that's not just about the bit that you love, but it's about the financials, because often that's what the investors are interested in. So even if that's not your bread and butter, you need to be able to talk about that, or at least get someone else to talk about that part of your business. And by all means, get help. I get that it's not what everyone loves doing, but get someone to put the numbers together and think about the best way of putting your numbers together. Because, the first thing they're going to do is look at it, and they're going to look at your numbers from a historical perspective, and they're going to look for continuity. And if you've got numbers that look like this and they've been jagging around, then you want to be able to talk about them and what were the reasons for that. Yeah. And you also need to be able to tell a compelling growth story or compelling reason for someone to be interested in your business. So have a think about what is it that makes you special. And if you can personalize that story to the people that you're talking to, that's really important. So if you can say, we can help you achieve this, or this is what you're trying to do, and this is how we fit into your strategy, then that's also a really good way of creating value and demonstrating value to them.
I'll just add to also, don't be afraid to, be prepared to talk about it, but don't be afraid to talk about like the up and downs and the downs, because you can't get away from it. It's part of your journey. Everyone fails, everyone goes up and down. And I think just being able to acknowledge it and not just give the vision of, it's all been rosy. I think when I'm personally talking to someone like that, it's a little off-putting, because it sounds like they're not fully aware of what they went through and what they need to be prepared for as well, because it's going to happen again. And
we understand. I mean, we were talking to a company, and they were going along very nicely, and then COVID hit, and their revenues dropped by half. you know, and that had a huge impact on their growth story, and that they've bounced back. But when you look at it, you see this big
What
drop.
is that?
And so what, you know, when we were trying to value them and have discussions with them, we essentially said, well, we'll normalize that. We'll pretend that COVID didn't happen, and let's look at what would have happened had it not been for COVID, because it's unfair that you're penalized for something that is unlikely to happen again going forward. But we needed to be able to have a conversation with them about what did you do during COVID that affected your numbers, so that we can normalize for that. And if, you know, fortunately they had a very good accounting person who was able to help us with that. But, you know, that was just one example where having that person at that, you know, that expertise that they could then draw upon got a much better outcome, because overnight we could give them a much better valuation because we were confident in the consistency of their numbers.
Yeah. Awesome. Well, thank you both so much. Really appreciate your time and your expertise, and I hope that everyone watching has found this as interesting and insightful as I have. It's been wonderful to talk to you both.
Thanks.
Have a great day at GCAP, everyone. Cheers.
Thank you. Thanks for the opportunity.